Welcome to the Bridgewater Perspective. This is a podcast that gives you insights on economic and business issues in Africa. Today, I'll be your host. My name is Matthias Tume. I'm an analyst in the Research and Intelligence Unit of Bridgewater Advisors. I have here with me Prosper Melome, who is a partner at Bridgewater Advisors, and Inyama Samoa, who is a senior manager M&A in Bridgewater Advisors. You're welcome to the podcast.
Thank you. Thank you very much, Matthias.
Thank you.
Today we are going to be discussing dealing with currency depreciation and spiral inflation, the implications that these have on businesses. We would like to look at Ghana today, and Ghana's economy has really been on a progressive growth, but recent developments put the economy in a very dire situation. We are seeing inflation rising up to over 31%. We are seeing the currency depreciating all the way to more than 38%, and people are losing confidence in the cedi, and there's a growing demand for dollars, and it's making the situation look very, very, I won't say bad, but that's how it looks like. Today we are looking at this situation, and we would want to first of all look at the question. Prosper, what do you think, in your opinion, brought us to this point?
Okay, thank you, Matthias. I think that's a very interesting question, and there are varying opinions within the public, or let me say, the public space. But I'll say, without being biased, let's look at the whole situation in an objective manner. First and foremost, positioning or placing Ghana in the context of global happenings. I'll say, to be fair, the global economy in general has been on the downward, particularly if you look at developments with COVID-19 from 2020. I'll say latter part of 2019 leading into 2020. The global economy has been hit generally. As much as, the whole globe expected positive trends when vaccination and other developments were looking positive. Then we had the issue of Russia-Ukraine. So coronavirus and Russia-Ukraine situation, this definitely had an impact on not just the European region. This affected trade globally, hitting Africa. A lot of African economies were dependent or are still dependent on activities in Europe. So Ghana is no exception to this. So we've had major issues happening on the global front, and that has impacted us as a country. The second part of it is, would say anytime a foundation of a building is weak, when the stem only collapses. So the Ghanaian economy has significant structural issues. So activities on the global front only expose weaknesses in our economy. And I wouldn't label any government per se, but these are things that have existed over a period of time, and it's about time we look at the Ghanaian economy and how best to address our structural issues. So you asked me what went wrong. I'll say first, it's a matter of global issues which were not planned. And then secondly, the structure of the Ghanaian economy. These are the two major areas that I will label as the factors that have gotten us where we are today.
Wow. Well, looking at, this season, two things have been very much on the discussion: the currency depreciation and the inflation. What connection exists between these two indicators in the economy?
Well, that's a very interesting question. I've heard people in the media talk about government focusing on addressing currency issues and leave policy matters, monetary policy issues, and so on and so forth. As much as I understand where they are coming from, we need to appreciate and look at these issues entirely. So yes, inflation has a relationship with exchange rates. First and foremost, when you have an economy where inflation is very high, it devalues the currency. And when that happens, you'd have the issue of purchasing power declining. So you need more to buy less. So if you pair that against other currencies, you see that the value of the primary currency would be lower. That's the number one issue between inflation and exchange rate. 2, perception of value. The other thing is, if we all have a perception about the cedi, that the value is declining, we want to hold our savings in a stronger currency.
Yeah.
And what that does is it places demand on the stronger currency. And we all know the supply-demand effect. So once again, this is where you can see the erosion of value having a direct impact on perception of value and influencing how people behave with currency. So there's that relationship that exists. I would also say, looking at once again the structure of the Ghanaian economy, where we are heavily driven by importation.
Yeah.
There's the common phrase we've heard around, which is imported inflation.
Yeah.
So this is a scenario where we are having to deal with we have to deal with two issues. One, we have an economy that is reliant on heavy imports, therefore making or increasing the demand for foreign currency. And we have goods to the extent of a lot of essential items being imported from markets. I did mention the Russia-Ukraine issue and other issues, disruption in trade.
Yeah, that affecting supply.
Yes, that affecting supply. So that has also led to goods coming in from overseas with heavy doses of inflation. So eventually what that does is it places more demand on foreign currency. All right, so you have an item that you would import at $1, you are importing now at $4. So you need more dollars.
Yeah.
So as much as the price has gone up by inflation, it's also affecting demand for foreign currency. So this is basically the relationships that exist.
Yeah. Certainly the importation. I mean, once the devaluation of the currencies goes, you need more cities to now get a dollar.
Yes,
to now
definitely.
import
Yes.
goods. You transfer this situation to prices, and then it increases the prices in the domestic market. So looking at this, I mean, the Bank of Ghana, in its attempt to try to address this, after their monetary policy committee meeting, they came out with certain releases in terms of what they're trying to do to clamp down on this situation. They increased the monetary policy rate. They try to increase the bank's reserves and to also try to get, much foreign currencies retained in the economy as much as possible. What are your opinions on the policy measures by the Bank of Ghana?
Okay, so what I think about what the Bank of Ghana is trying to do is that I think in the short term, these measures would have a positive effect on the currency, that's our cedi, in terms of controlling the demand for dollars. So when there are measures like increasing the cash reserves of banks, increasing the policy rates, these will affect lending rates, which would to some extent affect business activity, affect the extent to which importation or certain trade goes on in the economy. And in the short term, this would sort of decrease the demand for the foreign currency, which is the dollar, and sort of affects the cedi positively. But that is in the short term. So having this influence on business activities in the long term, although inflation will come down, business activity will slow down, and then that would have a negative effect on GDP in terms of growth in GDP. So I think these measures are good in the short term, but we need to look at it more carefully when it comes to the long term. So that's what I think.
Yeah, I agree with Inyonyam in what she said. I have a take on the actions taken by the central bank, particularly when it comes to the policy rate. So indeed, Edonia mentioned the short-term effect, and some have raised concerns about, well, what does this have to do with exchange rates?
Yeah.
All right. But this is my perspective. When the policy rates go up, we need to understand that directly this has an impact on the cost of borrowing from banks. And so the businesses importing, let's bear in mind that when we talk about importation, this is primarily done by businesses, not individuals.
Yeah.
And businesses are financed, right? And this financing mainly is in the domestic market from the banks.
Yeah.
So if lending rates go up and it has an impact on your costs as a business, and your margins get thinned out, you are discouraged from engaging further in that activity. So for me, given that we are an import-driven economy and the central bank trying to use this mechanism of the policy rate to influence cost of doing business, is going to deter the heavy reliance on importation to some extent. It's not going to solve anything. These are just short-term mechanisms. It's going to deter to some extent. My question rather is, to what extent are we ready to fill up the gaps in goods that cannot be imported? Because of, for example, high cost of doing business caused by high lending rates. These are, I think, are questions that have to be answered.
And these are definitely questions that have to be answered, because if we don't, like you said, if we don't get the structural issues fixed, we'll have these things repeating over and over again.
Yes, in the long term.
And I mean, you mentioned something important, that it is businesses that do this importation. Let's look at, as a business being done within this environment. The external environments in an economy affects businesses so much. What are the implications of these currency depreciation, inflation mixed up with BOG measures? What are the implications to businesses, and how should they respond?
Okay, that's an interesting question. I think there are a number of areas to look at, a number of impact points on businesses. I would like to start off by talking about erosion of working capital. Right, so the Ghanaian economy is SME-led, and most of these SME are trading businesses. And so if you are dealing with SMEs that do business, that is trading businesses, that is heavily fueled by, once again, some sort of importation, right? So you have working capital of, say, 100,000. You can use it to buy 10 boxes of an item to trade in. And so that's 100,000 float is your working capital. But then you go back to get these same 10 boxes, and now you need 120. Right? You either have to get more money or buy less
boxes.
Okay, so as you begin to buy less, you trade less, and as the price keeps going up, you actually are losing your working capital. Okay, so that's one of the heavy implications on businesses. The next is it generally affects cost of doing business. So you may be making a profit of 24%, 25%. In a situation like this, you may thin out your profit margins and even get into a loss situation. That's a major issue. Another point is businesses that trade significantly in the Ghana cedi, but do have expenditure or cost lines that are dollar or foreign exchange driven, foreign currency driven. For example, rent. Okay, so in corporate Ghana, we talk about a dollar rate per square meter.
Yeah.
And we have businesses that are doing, providing
Businesses.
services or whatsoever business activity it is, primarily dealing in the city. Right?
Yeah.
So if the currency depreciates by a certain percentage, as we are experiencing now, who takes care of that significant jump? You have to convert the CD to dollar to meet that dollar value. I know the Bank of Ghana has regulations about doing business in dollars. You need permission by the Bank of Ghana. But to what extent is this enforced? That's the first question. Secondly, the mere fact that businesses usually say we quote in dollars, but we receive the money in CDs.
Yeah.
All right? But it's pretty much one of the same thing.
You have to convert the
Exactly. So you are at that point. So this is one of these are some of the areas, and I also talk about implications on capital. So generally, a weak currency is not a capital attractive environment. Okay, so you are talking about investors having interest in the marketplace. We've had scenarios. I'll go a bit out of the private space and talk about even the public sector, the government failing to be attractive in the bond markets.
Yeah.
So generally, when you have a weak currency, it gives issues to investors, particularly foreign investors who want to avoid currency issues. So they'll do investment, be it particularly in debt, we'll do it in foreign currency. So we are talking about doing investments in dollars, for example. When that is done, the business has to pay you back in dollars, right? Your whole projection and your models that were built at the time of doing the deal, it could go 360. So the risk of default jumps up the roof. And that practically means the risk of lending or the risk of investing. So it's just unattractive if you compare the risk-reward relationships.
Yeah.
Okay. So I'll just add a bit to what Prosper has mentioned. As he was saying that when the cost of business is high, it erodes margins. Sometimes businesses get into losses which eats into their reserves. So what that does is that it becomes more difficult to invest in good opportunities. So that means businesses get into survival mode. So it's just about surviving the times, and they don't take certain steps to expand or to grow, which also has impact on creation of jobs and also eventually affects the economy or the growth of the economy. So this is also some of the implications of what is happening on businesses.
Wow. So looking at all this, does the picture look very hopeless?
Well, I wouldn't say it's hopeless. First and foremost, we need to understand where this whole issue is from. It's not just Ghana. It's global. So fundamentally, we as human beings, we fix problems.
Yeah.
So we'll get it fixed eventually. Right? That's one.
Or is it possible that in the situation of a free market, the market will have its own mechanism of coming to a equilibrium point?
Well, the free market theory holds, but the market has to be directed as well. And that's the role of regulators.
Yeah.
So, like I was saying, eventually we'll find a way around this situation. But also, let's pay careful attention to the measures that the governments and policymakers are putting in place. We've had the Ghana government engaging the IMF.
Yeah.
There are varying opinions about this, but that is it's a sign of the government taking, extreme measures to get the economy back on track. Because it's the same government that spoke about not being interested in an IMF program.
Yeah.
For the same government to go back to the IMF, as much as it looks like you are backtracking your words. I think the government, you have to call a spade a spade. So the government called a spade and went to the IMF.
Yeah.
And I believe that, engaging, let's say, for want of a better word, higher authorities to influence and assure policy credibility definitely is a step in the right direction.
Okay.
So it is not a case of hopelessness. We can look at the measures. I believe these measures, to a large extent, to get the economy where it's going. I also look at some of the measures by the central bank, which I addressed earlier, and its impact. The situation will not turn around in a twinkle of an eye, but I think it will be a gradual recovery.
I mean, talking about the IMF situation, we are hoping that the policy measures that will be associated with whatever agreement comes up will be favorable for the situation at hand. And we are looking at now, are there opportunities for businesses? Do they have a way? I mean, in the midst of adversities, there can easily be a bit of opportunity also for businesses in these times.
Okay, so I think I would answer the question. I think if you want to start off with coming in, and then I can have my take, because what I want to say at the end has something to do with M&A.
Okay. So I think that in times like this, essentials or businesses that are involved in essential services would realize some sort of stability and growth to some extent, because of inflation, most businesses will cut down on things that are classified as not essential.
Yeah.
Individuals will cut back on luxury. So the essential services, essential products would rather see some stability and to some extent some growth. And then products that are substitutes to things that people would normally go for. So this is just a Ghanaian example. So normally you would eat something interesting, but when times are hard, you would rather eat soakings or gari. So those things then become high demand because of what is happening. So these essential things, or people who trade in these essential things, would see some stability or some increase in demand for their services and their goods in times like this. So there are opportunities for these things, although most of the time they have lower margins. Yes, there are some opportunities for them. Yeah.
Okay, so I agree, and there's a lot. What you said is pregnant. There's a lot. So first and foremost, if you talk about opportunities that exist for essential items, you are therefore indirectly triggering solutions in the local market. So things like local production.
Yeah.
Right?
Yeah.
And so local production therefore means there's an opportunity to get local producers going.
Yeah.
That means that banks can pick their spots in lending.
Yeah.
So there's lending opportunity for the banks. You can lend well to local producers that are positioned to tap these opportunities. So that's an avenue. When that gets going, it also addresses to some extent the issue of jobs, right? There's also the factor of job creation, because when local industries, manufacturing sector gets going, then we have elements of job creation. I'd also say that when in an economy or in an economic scenario like this, it triggers in the popular buy low, and hold till it goes high.
Yeah.
Business valuation of a number of entities, particularly distressed entities, is going to go down. Right? If you have your analysis intact and you understand the structures and you can have a fair knowledge of what the future holds, this is also a good time for strategic investors, financial investors, to take advantages of businesses with low valuations, make your acquisitions, restructure, hold, and then have a massive harvest when the market turns around.
Wow.
So these are the opportunities I believe exist in the marketplace.
Yeah, and exactly, it's an opportunity for businesses because COVID-19 also gave opportunities for businesses, which caused a boom in M&As because there was it was opportunity for other businesses to take advantage of distress companies. Wow. So, as we come to the end of this show, what will be your final takeaways to anyone, any business person listening to us, anyone who's been thinking, what is the way? What should I do? Your takeaways, your final words as we come to the end of this.
Well, I'll say to be cautious, think twice, reevaluate your strategies. There were things that were planned. We know a lot of corporate entities go by strategic plans. And so most of these strategic plans are in motion, 5-year strategic plans. I know COVID disrupted a lot of these things.
Yeah.
And we've had a situation where it looked like COVID was under control. And a lot of businesses and companies reevaluated their strategic plans with a post-COVID mentality. But no one really looked at this type of economic situation. So once again, this, I would say, is a time to revisit strategy. Don't ride on the same strategy that you had pre-COVID, for example, or even revised during COVID. You have to look at it again. So I would advise or say that at this time, it's better to have a rolling strategy than a static one. Okay, something that you keep visiting more frequently than usual. So this is my final take.
Do you have any final words?
Okay, so to add to that, what I think businesses should do is to tread cautiously and also think carefully about cost and what is essential, what can be put on hold until things pick up, and to some extent, what investment must be done now so that when things pick up, businesses will also be able to harness opportunities. So there has to be that decision as to what to do now, what to put on hold, and what may seem like a difficult thing, but is what would keep the business going when times pick up. You need to carefully evaluate these things and make the right decisions.
Well, be cautious and then being careful with strategies and not being static, but keeping things rolling.
Yeah.
Thanks, Prosper and Inyom, for joining us today. Great having you on the program today. We hope to have you another time.
Thank you.
Thank you.
Listeners, that concludes today's episode on the Bridgewater Perspective.
Thanks for listening. If you enjoyed this podcast, leave us a comment and subscribe to the Bridgewater Perspective. You can also send your questions to theperspective@bridgewatergh.com. The information contained in this podcast is of a general nature and is not intended to address the circumstances of any particular individual or entity. No one should act on such information without appropriate professional advice after a thorough examination of the particular situation. Bridgewater does not accept or assume any liability, responsibility, or duty of care for any consequences of you or anyone else acting or refraining to act in reliance on the information contained in this podcast or for any decision based on it.